Is this the right time for major and transformative financial reforms? With the remarkable GST success, India is in a good position for the next level of financial reforms. There is a strong case for passing GST success to the masses in the form of financial reforms, a food for thought for economists, bankers, and financial experts. Is there further scope for reducing maximum effective individual and corporate tax rates to 25% and maintaining it for, say, 5 years to bring a sense of stability, certainty, and improve our competitiveness? With lower taxes, certain exemptions and allowances can be either streamlined or removed. With lower taxes, people and businesses will prefer to pay current tax rather than defer it. Can the minimum tax rate start from, say, 2% and progress gradually with more slabs to improve compliance and the number of taxpayers? Is there a case for exempting corporate dividend and bank interest income from tax to boost savings and investments needed for infrastructure? People use these incomes to cope with inflation and maintain their standard of living. Is the frequent fall in the rupee exchange rate sustainable in the long term? Significant devaluation of the rupee has an inflationary effect and masks inefficiencies in the economy. How much foreign exchange reserves are ideal for defending the rupee value? Chinese currency has been fairly stable over the years. The Indian economy is almost 3 times in purchasing power parity terms. Is this due to an overly devalued rupee? How do we align nominal and PPP GDP to reflect the true strength of the economy in world ranking? Gold import has been a big drag on our economy for years. Can India allow people to hold multi-currency accounts by depositing surplus gold? This way, more gold can come in the mainstream for reducing gold imports. This multi-currency account can also be allowed to invest in the overseas market to enhance our ownership of overseas assets. Capital gain tax on financial assets like equity can be abolished, as most of it gets reinvested, just like capital gain exemption on reinvestment in property. We can also do away with the difference between short-term and long-term capital gain tax. People should hold these assets based on fundamental and economic reasons, and not based on tax considerations. Although demonetization was successful, in future, India may have to go for selective demonetization and not full demonetization. 500 and 2000 rupee notes need not be cancelled at the same time while retaining other smaller notes. India can launch a sovereign fund with the help of RBI, LIC, SBI, and GIC, and use its profits for infrastructure development and public goods. Sovereign funds have played important economic development roles in countries like Norway, Singapore, Gulf countries, Hong Kong, and China. Targeted, stable, and long-term fiscal policies such as interest rates, tax rates, forex rates, and quantum of forex reserves are more likely to bring a sense of certainty, stability, and consistent economic growth. Auto-renewal of bank fixed deposit is a good facility, but for the reasons best known to banks, there are multiple interest rates with different periods, and variation in periods is not very significant. As a result, auto-renewal invariably results in renewal at lower interest rate, which is unfair to customers. So if banks want to offer auto-renewal of FD, it should be at the then highest prevailing rate. Financial reforms will lead to simplification and reduced administrative burden. While we embark various reforms, we also need to balancing and phasing in order to align with revenue requirements of the govt, and budgetary considerations to avoid shocks in the economy. Financial reforms will go a long way in making cities like Mumbai a top global financial center like London, New York, Tokyo, and Singapore.